Welcome to the deep dive. Today, we're taking a close look at United Health Group, ticker UNH. It's a big one for many portfolios. Our goal here is to really understand its current technical setup and, the fundamental story. And kicking things off, there's something pretty significant happening technically. UNH confirmed a death cross. Now, for those watching the charts, that's when the short-term trend, the 50-day moving average, dips below the long-term 200-day moving average. It signals weakening momentum, right, and often points to maybe a longer downtrend.
That's exactly right. It can really spook the market, especially institutional traders. They often have rules tied to these signals.
So they might start selling automatically.
Pretty much. And specifically for UNH, as of late July 2025, that 50-day average, it's around $302. It just slipped below the 200-day, which is sitting near $318. It just reinforces this pattern we've seen all year, lower highs, lower lows. It's a bearish picture, technically.
Okay, so with that cross confirmed, what are the really crucial price levels? Where should investors be looking for potential support?
Well, there are two key support zones to watch. First up is $250.
$250. Why that level specifically?
It was a major consolidation area back in 2022, maybe early 2023. So there's psychological support there. Plus, it lines up pretty well with a key Fibonacci retracement level, the 61.8% from that big bull run from 2020 to 2023.
Okay, common technical spot.
Exactly. If it fails to hold $250, that could really trigger some more serious selling, panic selling, potentially. Then a bit lower, you've got $215. That's more like a near-term worst-case support.
And that ties back to?
Pre-COVID highs, basically 2019, 2020 levels. We might see that tested if, say, the DOJ probe news gets worse, or maybe Q2 earnings really miss badly.
Got it. So those are the floors. What about the other side? If the stock tries to rally, where's the resistance, the ceiling?
Yeah, the uphill battle. First hurdle is right around $325. That's basically where the stock was just before the Q1 earnings disappointment that started this recent leg down, and it's near that 50-day average now.
So likely sellers waiting there.
Very likely. Any pop to $325 probably gets sold into unless there's a real shift in the fundamentals or some good news on the legal front. The really major resistance, though, is up at $368.
Okay, $368. What's significant there?
That lines up with the 200-day moving average, the one it just crossed below. And it was solid support for months back in late 2024. To reverse this whole downtrend, bulls really need to push back above $368 decisively.
Okay, let's shift gears a bit to the fundamentals. Q2 earnings are coming up July 29th. What are analysts expecting?
Yeah, the earnings expectations are pretty telling. The consensus EPS is forecast somewhere between $4.70 and $5.16.
That sounds quite a bit lower than last year.
It is. It's about a 25% drop compared to the $6.80 they posted a year ago.
Wow. Why the big drop?
Mostly due to higher medical costs than they planned for, especially in Medicare Advantage plans, and also some headwinds in their Optum Health Services unit.
The revenue's still growing?
Yeah, interestingly, revenue is expected to be up maybe around 13%, hitting close to $112 billion. So top-line growth is there, but costs are hitting the bottom line.
Right. And performance-wise, how has the stock actually done this year? And how does the valuation look after that drop?
Well, year-to-date 2025, UNH stock is down almost 45%. So it's really lagging the S&P 500 badly.
45%, okay.
Yeah, it's been rough. But because of that big drop, the valuation is looking more interesting to some. Its forward PE ratio is down around 13.95x. That's way below its 5-year average, which is more like 20.4x. So you're hearing some talk about it being a potential contrarian value play.
So a mix of views then. What's the overall analyst consensus rating?
It's still holding a moderate buy consensus. If you break it down, you've got 15 strong buys, 2 moderate buys, 7 holds, and just 1 sell.
Still mostly positive, despite the recent issues.
Generally, yes. And the average 12-month price target is floating around $360, give or take. That implies quite a bit of upside from where it is now. You even have firms like Bernstein calling it a top pick, believing EPS could actually double by 2029. That's a huge growth forecast, like 19% a year.
But clearly, there are significant headwinds causing the stock price drop. What are those main worries?
Absolutely. The big ones are those rising medical costs and Medicare Advantage, that surprise CEO departure earlier, the fallout from that big cyber attack, and, of course, the ongoing DOJ probe into their billing practices.
A lot to juggle.
Definitely. And remember, they missed earnings in Q1 and had to lower their full-year guidance for adjusted EPS to around $26.50. They also flagged a higher medical cost ratio, around 87.5%, which signals those cost pressures aren't going away quickly.
So it really feels like a tug of war between the negative near-term picture and potential long-term value. Can you summarize the bull versus bear cases?
Sure. The bulls are focused on UNH's scale, its diversified businesses, especially Optum's potential for innovation. They argue the bad news is priced in, the negative sentiment is peaked, and the stock is just plain oversold.
A setup for a relief rally, maybe?
That's the idea. And they point to insiders and even some members of Congress buying shares recently as a sign of confidence. The bears, though, are worried about the uncertainty. The Q1 miss shook confidence, and that DOJ probe is a big unknown. Plus, recent price target cuts from some analysts and a negative earnings ESP number suggests beating expectations this quarter might be tough.
Okay, so pulling it all together, for you, the investor listening, what's the key takeaway right now?
Well, that death cross is a technical warning sign. It suggests risk of more downside, maybe testing those support levels we talked about, $250 or even $215. You need to watch for signs of stabilization, maybe big volume on up days, or positive signals from indicators like RSI or MACD. But honestly, until UNH can decisively break back above that 325-368 resistance zone, traders are likely going to view any rally as a chance to sell.
A sell the rip environment.
Potentially, yes, in the near term. Longer term, though, analysts do expect things to normalize, maybe margins improving by 2026, and they see UNH returning to its historical 13-16% EPS growth path, supported by strong fundamentals like its cash flow and cash reserves.
So a complex picture. We have this bearish technical signal, the death cross, clashing with potential undervaluation and longer-term recovery hopes. That brings us to our final thought for you today. As UNH heads into its Q2 earnings call facing all these cross currents, what specific signals, technical, fundamental, or news-driven, will you be watching most closely to guide your decisions?